The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money coming to me. Money sets me free. I'm a money magnet. Money coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
From my perspective, at this moment, the decision to begin the normalization process at the September FOMC meeting seems less compelling to me than it was a few weeks ago. But normalization could become more compelling by the time of the meeting as we get additional information on how the U.S. economy is performing.
Unbelievable. Now they're saying, well, they may not raise rates. Make up your mind. Raise them, don't raise them. You know, it is ridiculous. For 6 years, every day they're talking, will they raise, won't they raise? Will they raise, won't they raise? You know, it's like the politicians. Why don't you tell the truth? Why don't you tell the people that we have to raise taxes? Why do you think we're $18 trillion in the hole? Why do you think we are negative every year? We pay all our bills, we finish up, and we did our budget, Congress, they pay everything, and they look at it and go, oh, we're $1 trillion short. That's like you being $1 trillion short in your checking account. When are people going to tell the truth? Well, politicians aren't going to tell the truth because they know if they told the truth, they'd have to raise taxes. Let me tell you, the last people we want to listen to on the stock market are politicians. Welcome to Phil's Gang, coast to coast around the country off the Wall Street Radio Network. It is Friday. What a week it's been. We're going to recap from last Friday where the stock market crash started and it ended as quickly as it started. But is it ended? I don't think so. And we're going to talk about that. Has it ended? Oh, my God. All right, let's go back and figure this thing out. Last Friday, everyone felt the market was in the beginning of the crash. That was September 21st. We had a 500-point drop. But first, before we talk about the drop, did it just come out of thin air? No, of course not. This stock market crash was interrupted in November of 2008. It didn't finish. It did not finish its job. The federal government, the Federal Reserve rather, came in and they interfered in the stock market crash. So they temporarily, for 6 years, held it back. What we saw, starting on Friday last week, was the continuation of the crash that started in 2007. Remember, in November 2008, that was not the end of the crash. Everybody thought it was the end of the crash. No, it wasn't. It was artificial. The plunger team came in and stopped it, just as they did on Tuesday. That's right, the plunger team. They came in on Tuesday and they stopped the crash just as they did in November of 2008. Interrupted again. But it's the same crash. Now, everyone has asked, how could this market crash, which started September 21st, Friday, drop 500 points, then on Monday, another 1,300 points? In fact, it was a historic day. Never before in the history of the market has the market dropped so fast. So fast. Nobody's ever seen that. Not the amount of points, but how fast it dropped. It was like the market was vaporizing. Then yesterday, it stopped, recovering nearly all the losses. Wait a minute. We started last Friday, and Starbucks is a great example. It was at $55. Monday morning comes, and it dropped 23% to 42. And Thursday, yesterday, it's back up even higher than it was when it started last Friday at 55. It's 56. It had a 23% rally. How could that be? What changed? Apple last Friday was at $112, dropped to $92, 17% drop. That was Friday. And here we are this Friday, it's back up. Higher than it was last Friday. It's at 113. Last Friday it was 112. It had an increase of 22%. Disney, $100 dropped down to $90. $10, 10% drop. You know where it is now? $102, a 13% rally. And it's $2 higher than it was last Friday. Nike, the same thing. Twitter, the same thing. Boeing, the same thing. Wait a minute, what's going on here? What's going on? To understand, you need to go back to November 2008, where I said the market was interrupted by the plunger team. The plunger team. The same plunger team that came in on Monday, actually, to backstop the market. They backstopped the 2008 crash, and they backstopped this crash, August 21st crash. Now, remember going back in 2008, the plunger team told the banks, we're going to introduce QE. So the Fed, instead of lending the 5 largest Wall Street banks at a rate of 5.2%, 5.25%, we're going to loan you money near 0%. So now you can loan all your banks, as I told you before, loan all your banks money at 0.25%, and the economy can start booming. That's what they told them. And we'll buy all your bad mortgages. And if your mortgage was $100,000, it's only worth $5,000, we'll buy it at $100,000. We'll buy all your treasuries. We'll buy everything you have so that you'll have a clean balance sheet and you'll have a whole bunch of cash. We'll start you out with a whole bunch of cash. The idea was to give the 5 largest banks cash to speculate in commodities because China was in the biggest infrastructure construction ever. They're building 20 new cities, each the size of Boston, and they were building all the infrastructure out, which they need a tremendous amount of commodities. So they said to the banks, the plunger team said to the banks, the 5 largest banks, go and buy and speculate in all these commodities. However, we also want you to do something else, they said. We no longer want you to loan money to Main Street. We realize your money, your profit centers were commercial, housing, small businesses, no more. We're going to give you all this money, but we do not want you lending to Main Street, to commercial property, housing, or small business. Stop. And what we're going to let you do is we want you to go in now and we want you to lend money to all the largest hedge funds on Wall Street and in Europe. Because what we're going to do is we're going to financially engineer one of the biggest rallies in history. The market's going to go up 180% in the next 5-6 years. And we want you to go to all our friends on Wall Street, all the hedge funds, and loan them all this money. Loan all this money so they can help push this market up. And that's what happened in 2008. And that's how we got where we are, where the market, we had the biggest rally in history. All based on, don't take any money and give it to Main Street or give it to small businesses, but just give the money to people who will go and speculate. And that's been the banks and been hedge funds, and they're the ones that made all the money, while the 141 million Americans who are working are suffering, and 62% of the 141 million Americans who are working, most are part-time, and 62% are making $28,000 a year. That's right. Over 140 million people, you got over 60% making $28,000 a year. That is the result of what happened in November of 2008 when they told the banks, you do not loan to your communities, take this money, and it's all going to be for speculation and for the hedge funds. We'll be right back after this break, and we'll tell you the rest of the story.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG. At philsgang.com, we promote core technicals and chart analysis that enables each Phil's Gang member to be the best investor they can be. At philsgang.com, stock investing is defined in detail by the Phil's Gang standards. Working together, we achieve our goals and ultimately provide a truly unique profit-taking experience for our members. This is what philsgang.com does, and no one does it better than the off-the-Wall Street maverick, Phil Grande. For over 15 years, Phil coaches and teaches that stock investing diversity goes beyond fundamentals and stories. We believe that amazing things happen when people invest in themselves by following Phil's format and recommendations. At philsgang.com, we believe in the desire to embrace, build, and deliver on our core values and promises. And for over 15 years, Phil Grande has delivered on that promise. For more information, go to philsgang.com or give us a call at 877-600-GANG. That's 877-600-4264. Stock market corrections may seem like random occurrences, but the fact is, market corrections are bound to happen. But what if you could see the correction coming in advance? What if you could be prepared to short the market before it's too late? Don't get caught off guard. Become a philsgang.com member and get all the daily market information, investment strategies, and be prepared to make profits when the market is up or the market is down. You can do this for only $49.95 a month. Learn how to invest in the market, get daily coaching guidance on your investments, and take the first step of putting profits in your pocket. With philsgang.com, you just log on and get daily instructions on how to invest in the market. You don't have to worry about long-term contracts or hidden fees. Plus, all philsgang.com material is archived, so just log on and enjoy the ride to profits. philsgang.com. Go to philsgang.com or give them a call today at 877-600-4264. That's 877-600-4264.
Some girls wish to grow up and be a princess. Other girls wish to simply grow up. May and Bailey are friends battling kidney cancer at St. Jude Children's Research Hospital. We developed a treatment for their cancer that's helping kids like them across America.
You know what I wish for?
What's that, honey?
My hair back. And no more cancer.
Well, girls, St. Jude is working on that.
Donate now at stjude.org or shop wherever you see the St. Jude logo.
You should expect that your advisor is going to make outbound calls to you. Yes, we make outbound calls to all of our clients at least twice a year.
Twice a year? I hear my ex-wife call me more than that. You nuts, twice a year? And she's not managing my money. Are you nuts, twice a year? You're sitting there and the stock market's going down 1,300 points on an open, and you're hoping he calls you? No, that doesn't happen at Phil's Gang. At philsgang.com, we have technology so that we're in charge of our stocks. We're in control. We don't call these crashes. We call these corrections. Look, join the gang, Phil's Gang. Be part of our gang. Be part of a correction, not a crash, using our technology. Join my gang, philsgang.com. It's only $49.95. That's philsgang.com, $49.95. See you on the charts.
For more information, go to philsgang.com or give us a call at 877-600-GANG. 877-600-4264. What is Phil's Gang? philsgang.com is a subscription website service that host Phil Grande has been teaching and providing daily stock investment recommendations for over 15 years, all in the name of making its customers educated investors and helping the kids at St. Jude's Children's Hospital. If you want to take charge of your financial future, then do not wait any longer. For only $49.95, become a Phil's Gang member today. Go to philsgang.com or call 877-600-GANG. That's 877-600-4264. At philsgang.com, we promote core technicals and chart analysis that enables each Phil's Gang member to be the best investor they can be. At philsgang.com, stock investing is defined in detail by the Phil's Gang standards. Working together, we achieve our goals and ultimately provide a truly unique profit-taking experience for our members. This is what philsgang.com does, and no one does it better than the off-the-Wall Street maverick, Phil Grande. For over 15 years, Phil coaches and teaches that stock investing diversity goes beyond fundamentals and stories. We believe that amazing things happen when people invest in themselves by following Phil's format and recommendations. At philsgang.com, we believe in the desire to embrace, build, and deliver on our core values and promises. And for over 15 years, Phil Grande has delivered on that promise. For more information, go to philsgang.com or give us a call at 877-600-GANG. That's 877-600-4264. Are you ready to make profits in the stock market? Why not check out philsgang.com? Now, here's Phil.
And welcome back to Phil's Gang. We're doing a recap. I've never had so many emails where people are asking me, what happened since last Friday? How could Starbucks go down from $55 to $42, a 23% drop, and today they recovered not only back to the 55, but back up to 56, a 33% recovery. What happened? Monday, the world was falling apart. The Monday afternoon, we had this big recovery start. It's very simple. It always comes back to our plunger team. It always comes back to interference. We never let the market correct. We never let the economy go into a recession. That's why we don't have recoveries. That's why they have to keep propping these things up. They backstopped the 2008 crash the same way. The same plunger team, exactly the same people. It's amazing. So this time, August 21st, when the market started to collapse, the bank said, whoa, wait a minute. What's going on here? We got this crash going. We've got all these hedge funds that we make most of our money, most of our profits from. They're going down. We're going to go down. So they had a meeting with the plunger team and said, whoa, wait a minute here. Do you realize what's going on? You told us in November of 2008 to stop loaning to Main Street, stop loaning commercial property or residential property or small business. We did that. And then you gave us all this money and you told us to give money to the hedge funds and to keep loaning them money so they could buy stocks. And we've been doing that for 6 years. Now, all of a sudden, the money that we loaned them, we have to call them and tell them they're upside down. They better start paying us back now, called margin calls, or we got to start liquidating their stocks. And that's what we've been doing. We started to liquidate because they're not going to write us checks. So we had to liquidate their positions, and Starbucks dropped like a rock. Goldman Sachs stock dropped like a rock. Goldman Sachs went down 17% in one day. Intel, 20%. Caterpillar, 18%. IBM, 16%. What's going on here? If this keeps going, if they keep liquidating, this market's going to drop about 30%. You got to save us, just like you did in 2008. And the hedge funds said, that's what we're going to do. Here's what you do. You contact all your hedge funds, all your clients, tell them to stop liquidating their stocks to meet their margin calls. Tell them you're going to stop. There's not going to be any margin calls. Tell them you talked with us, and we are going to turn the stock market around, and we're going to move Starbucks all the way back up. We're going to move Starbucks that dropped from $55 all the way down to $42. We're going to move it right back up to 55. And we're going to move and take Apple that dropped from 112 down to 92, 17%. We're going to move that back up. And we're going to take Twitter, which dropped from 27 down to 21, 22%. That 22%, we're going to move it right up. We're going to do the same thing with Nike, going to do the same thing with Boeing, and they're going to even be higher by the time we hit this Friday. And that's what they did. Can you imagine? So the banks got bailed out again, and the hedge funds got bailed out again. Now the stock market is nearly back to where it is. So what does this mean? Well, it's a fake rally. It's been a fake rally since November 2008. It still is. Can it hold? Can it stay here? Of course not. A stock market can't hold. You can't take a stock market and all of a sudden it drops. It starts dropping. The S&P drops 13% on Monday. Then by Friday it's back up to 13% again. Back up. They gained it all back. What changed? Nothing changed. Did we create more jobs? Is there more people working getting overtime? Do we have more people full-time? Did we go from 28 million part-time to 38 million full-time? What changed in a couple days? Nothing. The same thing. We always bring in the plunger team to save the banks. We can't do this anymore. See, the markets crashed because the big institutionals started to pull money out in the last week of July. They've been pulling it out. The 5 largest banks, for the past 6 years, their big profits been coming from lending money to hedge funds to buy stocks. So they had a meeting to fix that. And now here we are. We're sitting here on Friday afternoon, and the stock market, the S&P, dropped. It dropped from 200 on Friday. 202 on Friday is right now near 200, only 2 points away. So what do? Well, we made a lot of money because what we do is we don't pay attention to this nonsense. If you pay attention to the money flows, you always know which way the market's going. You always know. So we knew in July to sell short the market. We knew all of our stocks, Schlumberger, Goldman Sachs, Intel, Caterpillar, all of them, to sell short. We knew it was over. And we were in front. And we made some nice profits. Now, we also know the market can't sustain itself because, again, nothing has changed. Nothing. There are 142 million in people employed in this country. 9.4 million self-employed. Isn't that pathetic? Just 9.4 million. And 62% of our workforce makes $28,000 a year. And only 6% or 7.4 million are self-employed making $50,000 a year. Has that changed since last Friday to this Friday? No. The Federal Reserve has destroyed the wealth of the average American. The Federal Reserve caused a dot-com bubble, wiping out $5 trillion of wealth. Then the housing bubble, another $10 trillion of wealth. And, by the way, another $10 trillion of wealth on the houses, plus another $4 trillion of wealth on stocks. They create bubbles by printing money. And this is exactly what they did to bail out the banks on Monday. So that's not changed. Until we can change, until we can stop this, the bailouts, we cannot have a recovery. We're not in a recovery. So what does this mean? The market is going to continue to go lower, and you're going to have tremendous opportunity. We'll be right back after this break. 28 past. Back to Phil's game. Remember, on Tuesday, September 1st, I have been invited by the Sarasota Patriots to be the special guest speaker at their town hall meeting. That's going to be at 6. Make sure you look at my video where I proved to everybody that I knew this market was going to drop, and I said it was going to drop in July when it turned from green to red. On my PT2 chart, it's right there, a full video, it proves it. Now, people have been asking me, well, you think now that they rally this all the way back up to where this thing started, will it hold? Of course not. Because you got to understand the stock market crash that started in 2007, that stopped in November 2008. It was the plunger team, that's the Secretary of Treasury, that's the chair of the Fed, of the SEC, the chairman of the CFTC, and the president, who every time there's a crash like this, again, for us, the gang member, it's certainly not a crash, it's a correction because we are in control of our stocks. Give you an example. I'm not making this up. Schlumberger, we had that stock when we were short, a 22% on Schlumberger, Goldman Sachs 17% drop, Intel 20% drop, Caterpillar 18% drop, IBM 16%, and a railroad NSC 21%. Those are the same stocks we are in all year long. That's the most important thing. If you're going to be an investor, you stay with the same stocks, always the same stocks, because it doesn't matter about the fundamentals of a company. Those days are gone forever. It's all about following the cash flow of the institutions that own Caterpillar, the institutions that own Goldman Sachs. When they put money in, we put money in. Take Caterpillar, for example. I'll put it up on my site now, philsgang.com. Take a look at Caterpillar. Go to philsgang.com, click on Listen Live. If you have watch live. If you have a mobile device, take a look at it. If you're home or your office or your computer, look at this. Caterpillar turned from green to red. Look at that. From $88, it turned red all the way down to $70. 88 to 70. That's a 24% drop. 20% drop. That's a 20% profit. It still hasn't turned green. So when you hear these jibber jabbers come on CNBC today to say, start buying Caterpillar, start buying it right now. This is the great thing. This is buy on the pullback here. Great buying opportunities. Don't listen to them. Don't listen to them. Then you hear all these guys. Listen to these dopes.
Earlier this week, New York Fed President Bill Dudley called the case for a September rate hike less compelling. Would you agree with him?
I think it's early to tell.
It's early to tell. Check this guy. Again, this is unbelievable.
Do you think the Fed should go another step and do additional easing or quantitative easing or negative interest rates?
The situation right now certainly is one, given our inflation outlook, is one that would call for consideration of those kinds of steps.
Yeah, that's the only thing they can do is another QE. For heaven's sakes, we have never gotten back all the money we have lost. When the market crash happened and started in 2007, finished November 2008, we had an interruption. Think about it. The very, very wealthy picked up $6 trillion in this 180% rally. That was a fake rally. The economy wasn't improving at all. The economy wasn't growing at all. What they were doing is propping up the economy. They got their net prop up. They put $6 trillion in their pocket, and 99% of the population, $2 trillion, came out of their pocket. See, the money came from the middle class and the poor up to the rich. It's reversed. It's reversed. It's ridiculous. So that money that we have lost, we haven't captured it back. Ridiculous. So again, if you take a look at Caterpillar, all you had to do is be short. And now we have this rally because it hasn't turned back to green. We haven't finished it. If you are using the PT2 in your long term, all you would have done is taken some nice profits. Just take some nice profits, but because it's still red, you don't have to change your position. If you're going to be an investor where you're investing for 2 to 6 days using my other chart, the PT2, then we got a nice rally on Caterpillar. Got a nice rally on Caterpillar. In fact, Caterpillar went up. Caterpillar went up from some $72 all the way up to $76, $77 actually. That was a nice run. So you're again, if you didn't catch, if you're standing by and you're watching this market going down, just think of the opportunity you lost. That's Caterpillar. Yeah, we'll put another one up for you. We'll put up another one for you. Let's put up another favorite stock of ours. Okay, Schlumberger. SLB is the symbol. It's still red. Now let's think about it. It turned from green to red. Here it is, green to red. It was at $93 and turned red. So it dropped from $93 down to $68. $68. 93. That's a 26% profit. Cut it in half. Say you got in late. But it turned from green to red. 26%. And then when the plunger team came in, and the lights and the bells went off, the plunger team came in on Monday. It went from $68 in the next 3 days to $26 or $76. $68 to $76, Schlumberger. What's wrong with that? That's a good return. That's 11% return in 3 days. But if you're using the PT2, it's still red. So you would have done nothing. You would have just taken some profits, that's all. Because while it's red, it's telling you the institutions have yet put enough money into Schlumberger, have yet put enough money into Caterpillar. You got to wait till they put enough money in. That's the beautiful thing about the PT2. It's long term. You want to be in a stock for 2 to 6 months on average. Now, the PT1 chart, we're in for 2 to 6 days. That's for more of an active trader. Somebody who wants to be in front of their computer watching this every day. That's different. That's different. But for the majority of people, Schlumberger, you would have just caught it all the way down, taken profits, and still wait. Wait for it to go back down. Now, as we talked about this week, when we had this turnaround and the plunger team, they came in and tried to fix this thing. Remember what Ron Paul said about the plunger team.
I think the Fed is very efficient, and the plunge protection team is very efficient, and they have gained confidence in the market that the Fed won't allow this market to drop. This is why I've always leaned toward the assumption that the Fed is never going to raise interest rates deliberately. I think the market will raise interest rates.
Yeah, and we said that yesterday. They're not going to raise interest rates. They can't raise interest rates. So here's what I want you to do. If you missed out on Schlumberger and Goldman Sachs and Intel and Caterpillar and IBM because you're not a gang member, join the gang. Go to my site, philsgang.com. Look at my video. I have a video showing you how the market dropped in July, the S&P, where we said to short it in July. Join the gang. Just try it for a month. What a difference it will make in your life. I'm telling you. We'll be right back. It is 43 past the hour here on Phil's Gang. Join the gang.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
You should expect that your advisor is going to make outbound calls to you. Yes, we make outbound calls to all of our clients at least twice a year.
Twice a year? I hear my ex-wife call me more than that. You nuts? Twice a year? And she's not managing my money. Are you nuts? Twice a year? You're sitting there and the stock market's going down 1,300 points on an open, and you're hoping he calls you? No, that doesn't happen at Phil's Gang. At philsgang.com, we have technology so that we're in charge of our stocks. We're in control. We don't call these crashes. We call these corrections. Look, join the gang, Phil's Gang. Be part of our gang. Be part of a correction, not a crash, using our technology. Join my gang, philsgang.com. It's only $49.95. That's philsgang.com, $49.95. See you on the charts.
For more information, go to philsgang.com or give us a call at 877-600-GANG, 877-600-4264.
Be sure to watch the Phil's Gang Show with Phil Grande, weekdays at 3 p.m. Eastern Standard Time on various devices like smartphones, tablets, your computer, and more. Get free access to the Phil's Gang Show right in your hands at home or on the go. Simply go to philsgang.com. That's philsgang.com and click on the Listen Live link. And we'll see you on the charts.
At philsgang.com, we promote core technicals and chart analysis that enables each Phil's Gang member to be the best investor they can be. At philsgang.com, stock investing is defined in detail by the Phil's Gang standards. Working together, we achieve our goals and ultimately provide a truly unique profit-taking experience for our members. This is what philsgang.com does, and no one does it better than the off-the-Wall Street maverick, Phil Grande. For over 15 years, Phil coaches and teaches that stock investing diversity goes beyond fundamentals and stories. We believe that amazing things happen when people invest in themselves by following Phil's format and recommendations. At philsgang.com, we believe in the desire to embrace, build, and deliver on our core values and promises. And for over 15 years, Phil Grande has delivered on that promise. For more information, go to philsgang.com or give us a call at 877-600-GANG. That's 877-600-4264. There is only one talk show host, Phil Grande, who delivers both social and financial talk. Not even Hannity or Rush can deliver a 1-2 punch like that. That's Phil Grande, philsgang.com. Phil Grande is unique, the industry leader, the first talk show host ever to combine social issues and finance into winning stock market ideas. That's Phil Grande, philsgang.com. That's philsgang.com.
Hi, I'm Phil Grande of Phil's Gang. You know, on May 29th, I warned that a stock market crash was coming. I also warned in July. Both times, I was watching my technology, my PT2 chart, and it turned from green to red. Both in May and July, we had substantial warnings. We saw the industrials fall. We saw that the market, the Chinese market was falling, was getting worse. Oil was falling. Copper was falling. Everything was falling. But again, CNBC was telling you, hey, things are cheap. Diversify. Everything's wonderful. But my chart was giving me something different. And on both those occasions, both in May and July, I told my gang, let's short the stock market now, because my PT2 chart indicated a sell-off was coming in. And we did. And we had a wonderful ride all the way down. Join my gang, Phil's Gang.
For more information, go to philsgang.com or give us a call at 877-600-GANG, 877-600-4264. Welcome back to the Phil's Gang Show. This segment is brought to you by Phil's Talking Trader Stock Charts.
And welcome back to Phil's Gang. People keep asking me, is this it? Is it over? Well, they're listening to the experts here. Listen, here's one expert. Listen to this dope.
We look at certain data points, which I don't really like to talk about how I feel about stuff. My wife would complain about that too. But generally speaking, the notion of, if I look at intra-stock correlation, going into this, we were in the low teens. We're pushing in the 60% range. 10-day intra-stock correlations are in the mid 70% ranges already. That usually suggests that you've got this kind of herd mentality of selling. Everything's kind of trading down the same way. So you are seeing some signs of investors kind of throwing in towels. Now, I'll tell you a different factor. At the end of Monday's trade, if you look at the 90-day implied volatility divided by the 30-day implied volatility.
My God, you get a headache? Listen to these guys. What a bunch of nonsense. Here's another one.
Will continue until you get one of two things: a policy circuit breaker, and this doesn't come out of the Fed or the ECB, it has to come out of China, or prices fall low enough to bring in buyers.
Where are the buyers going to come from? We just got rid of the buyers. We had the biggest dump of stocks in the last week of July, you fool. The biggest dump. These guys on Wall Street drive you crazy. Let me tell you why. They came in and they begged the plunger team to come in and to save the banks and to save the 1 percentile. Let me tell you why. Because the amount of money these hedge funds, these gangsters borrow relative to the growth of our economy, which sucks, has a big effect on stock returns for the 1 percentile, for the richest people, for the banksters, going forward for the next 3 years. Which means, if they don't come in and backstop this market from collapsing on Monday, then it meant that the markets could lose, these 1 percentile going forward for the next 3 years could lose 50% of their stock value. Why? Again, the amount of money these hedge funds borrow are huge. Because remember, in 2000 and 2008, they told the banks, we're going to give you trillions of dollars. And we're going to give you this money, and we got to get the stock market up. We're going to push it up for 180% because we're going to make sure the 1 percentile are very, very wealthy. We're going to take care of the 1 percentile. And we're going to take care of the banks. So now when the market starts to fall apart, starts to going down, who do they think of? Do they think of the guys on Main Street? Do they think of the 142 million workforce? Do they that 50 or 62% of them are making 28 grand a year? 62% of our 142 million workforce making 28 grand a year. That is embarrassing. They didn't even make it worse. Only 60% or 6% of the 142 million workforce we have are self-employed. 6%. That should be 3 times that. All they care about is themselves, and that's what we saw the other day when they came in and saved this market from going down. But they saved nothing. You're not going to bring buyers in here. It was like a shot in the arm, and it's like, here we go again. They're addicted to cheap interest rate money. They printed a bunch of money on Monday afternoon, gave it to the banks, and said to the banks, here's some cheap money, 0%. Go in and you buy all these stocks. You go in and you buy Starbucks. Go in and buy all these stocks. The top leaders that have moved this market up. That was what they did. Disney, go buy more Disney stock. Buy more Boeing. Buy more Twitter. Buy more Apple. Here. It's just like they're addicted. As soon as it came down, they had to get it fixed. Give me cheap money. Give me cheap money. I need it fixed. I got to get the market back up. And why? Because they know one thing. The amount of money that they loan to these hedge funds at 0% has been humongous. Each one of the 5 banks have loaned out a minimum of $35 billion. $35 billion each to these hedge funds. So let's think about that kind of money that they borrowed relative to the lousy growth of our economy at 2%. That has a huge effect on stock returns for the 1 percentile, who made $650 million extra in the last 6 years. So millions. So going forward for the next 3 years, the 1 percentile knew. They said, God, you got to stop this. We got to stop this from going down. Because the hedge funds have the reason why the market is going up for 6 years is the hedge funds have most of the money. They invested most of the money. If this keeps going down as fast as it's going down, we never see it go down this fast, then in the next 3 years, I'm going to lose 50% of my money. Well, we're going to stop that, okay? Bam, stop. Did they stop it? No, it's not stopped. They didn't stop nothing. So don't listen to these educated nincompoops. They know nothing.
Right now, we're sending the message that we're very nervous about ever exceeding our 2% inflation target. We're treating it like a ceiling.
Oh, 2%. I'm so sick of hearing about inflation, this inflation target. Give me a break. Are you kidding me? Why don't they tell us the truth? They create bubbles by printing money. If they told the truth that inflation was 8% instead of 1.5%, it would increase the cost of borrowing money from 0 to 8%. And since the Fed is spending 47% of every tax dollar we spend on paying the national debt, it would increase to 80%. Exactly what happened to Greece. Congress would have to raise the tax rate to about 70%. Inflation. This thing about inflation, Yellen has been talking about inflation. We got to move inflation up to 2%. All inflation is raising taxes. Instead of being honest to the people and say we're in a hole, we got to raise taxes, they do it this way. They try to push inflation up. And she believes, let's not move rates up. Let's lie. We'll say we're moving them up, but we're not going to move them up. But we'll move inflation up, and that's a tax. They're liars. They need to raise taxes. Look at all these government entitlements, all the employment checks, now extending to 36 months. Oh, yeah, 36 months. All the welfare spending, all the Medicare, all the Social Security. And remember what Obama did. He increased it by $50 billion, his budget for welfare. Where do you think it comes from? So we're going to push up inflation. Push up inflation. That's the answer. No, the answer is jobs. See, the other reason they lie, because if people ever actually realize the actual rate of inflation is higher than what the Fed states, they would realize their paychecks is buying less. And savers would understand if the bank is giving them 0.25% and inflation is 8%, they are losing big, especially retirees. They would march on Washington. They would. They would stop them. It's unbelievable, isn't it? It's unbelievable. So what do you do when you see something like this where the market collapses? Do you run? Do you get scared? Say, I'll never be in a stock market? No! You come to me. You come to Phil's gang. That little chart, the little chart that we had, the PT2, in July when it turned from green to red, it's still red today. Even after this big rally back up, it's red. Why? Because it's telling you the institutions haven't brought enough buyers. There's not enough buyers in this market to hold this rally we had in the last 2 days. Isn't that a wonderful thing to know? So if you had money and you wanted to invest, you'd say, I'm not going to invest right now. Because even though the market went up and CNBC is telling us to invest right now, oh, start buying now. This is the time to buy. Buy in the pullback, they tell you. What are you, nuts? Are you nuts? Starbucks hasn't even turned green. Starbucks didn't even turn green. Starbucks dropped from $56 down to $42, and now it's back to $56 again. And guess what? It's still red. What's that tell you? It tells you that whole rally that we just had in Starbucks is fake. But if you wait till it turns green, it's telling you the institutions are putting enough money in. As a matter of fact, it makes what we call a W pattern. Look, here's what you should do. Join my gang over the weekend, because this market is going to go down again. And this time, you can participate in these profits on the way down. You can participate. Hey, remember, too, all my folks, all the people here in Sarasota, Tampa, Tuesday, September 1st, I've been invited to the Sarasota Patriots. Go to speak at their town hall meeting at 6 p.m. on Have a safe weekend. We'll see you on the charts.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to me.